Erin Kennedy here today with Evan Niu. We're doing Tech Teardown for Tuesday, March 4th. Market researcher Gartner has released its newest estimates on the tablet market's stats for 2013, with units approaching 200 million. Who are the winners and losers?
Well, so to a certain extent, everyone kind of won because the market grew so much, grew by about 70% to this 200 million unit figure that you mentioned. Apple's share declined from over 50% in 2012 to a little bit, right around 36% in 2013. So they're giving up some share. Naturally, Android is kind of making up for that that share loss, and Android now powers about 62% of all tablets sold. Android tablets are starting to become heavily commoditized, and there's a lot of pricing pressure, so they're appealing to all the budget buyers in emerging markets.
So some reports noted that Apple's reported tablet sales, the number is actually differed from Gartner's number. What's up with that? Is Apple pulling one on us, or is Gartner?
So I did read a report from Apple Insider calling out that there's this discrepancy, but I think that the outlet has it kind of wrong with how these numbers are reported. So Apple reported 74.2 million iPads sold in calendar 2013 versus Gartner's estimate of 70.4 million. So we're talking about almost a 4 million unit difference. But the difference is that Apple reports based on sell-in, whereas Gartner is trying to measure it based on sell-through to end users, so it's not going to factor in things like changes in channel inventory. So there's a big difference when you're comparing how those numbers are reported. So that's really the explanation there.
So Microsoft, among others, saw its position jump pretty significantly in 2013. Is this meaningful for Microsoft?
They did put up a nice little gain. They got about 4 million Windows tablets sold last year. Still a pretty small portion of the overall market at about 2% market share, but that's up from 1.1 million in 2012, so it's a pretty big jump year over year. I think that they're still facing some challenges with getting their ecosystem as kind of adopted by consumers and really having a good offering in terms of apps and content and everything that people look for nowadays. They're trying really hard to address some of the weaknesses in Windows 8 with Windows 8.1. Been a lot of criticism that we've talked about, all sorts. At the same time, they're also facing a lot of pricing pressure on the low end. For example, last month, Bloomberg reported that Microsoft is cutting Windows 8.1 license fees by about 70% for any device that retails for $250 or less. So they're only going to be asking $15 now. Whereas in that market segment, you're primarily competing with Android tablets, which are distributed for free, and you can't really get away with charging a $50 license fee, which is what they had been doing on a device that sells for $250. It just is not really sustainable for the OEMs.
Well, so now Samsung has been gunning for Apple in the tablet market, and obviously the smartphone market as well, everywhere, let's be honest. Is the South Korean conglomerate making progress here? They
are. So in terms of unit volumes, they are coming up in a big way. They were at 8.6 million in 2012, and they're up to 37 million. So that's roughly a four-fold increase in unit volumes. And I do remember at their analyst day last year when they kind of gave a little bit of insight into their financials, they did say they were targeting 40 million units in 2013. So I mean, they're getting pretty close to that number. They're still behind Apple by a large margin. Apple still ships almost two times as many tablets, and all on the high end. But I think Samsung's using the same strategy, and it's working. Offer a really broad portfolio of devices, target pretty much every price point and form factor you can conceive of. But they also think that there's a lot of opportunity in this high-end market of this 10+ inch tablet market. Like they recently released these giant 12, 13-inch tablets. But they think that market segment can grow at around 20% over the next few years. So I think it is entirely possible that Samsung overtakes Apple in the tablet market in 2014 in terms of unit share, but Apple still probably lead in profit share.
All right. After precipitous fall from grace, Zynga has been flying high lately. Shares tapped a fresh 52-week high today. What's driving today's rally?
So there's a couple things. The first one is that CEO Don Matrick, speaking at a Morgan Stanley conference today, really kind of outlining his longer-term strategy, discussed mobile plans, also confirmed that the company is still looking at rolling out real money gambling in various geographies around the world. No official announcement, but this is coming pretty soon, and that's been kind of one of the bull cases, is that they can really explore this real money gaming market. They also discussed the Natural Motion acquisition, talked about how it really gives Zynga the ability to scale in a greater way than it has before. The underlying technology from Natural Motion has powered a wide range of blockbuster movies and games over the past few years, and they're, I think another thing they also mentioned today was they're actually rebooting 3 of their most important titles also, actually.
So you said the most important titles. I'm guessing Farmville's got to be one of them.
It is. The COO outlined it in a blog post saying, Farmville, Zynga Poker, and Words with Friends, they're all going to be relaunching soon with new versions. And specifically, these are going to be relaunching as a mobile-first designs. So I think that's kind of a smart thing, because Zynga's transition to mobile has been what what's been so hard for it in the first place. It had all the success on Facebook's platform, but had a really hard time kind of moving over to iOS and Android. So I think that designing these games from the ground up for mobile is definitely the right call. They're still trying to get past this OMG Pop stuff from a few years back to kind of put that behind them. But just to kind of put some numbers to it, Zynga Poker was 21% of revenue last year, and Farmville 1 and 2 combined were 33% of revenue. So those titles combined are over half the business. And Words with Friends is a little bit less financially important and a little bit hard to monetize, but I think it also builds some brand strength.
So there's been reports that one of Zynga's main rivals, King, the maker of Candy Crush, a super popular game, is going to be going public. How do you feel about King versus Zynga? Do you think Zynga should feel threatened?
To a certain extent. I mean, King has really killed it on using this freemium model on mobile, and not only King, but also companies like Supercell, who makes Clash of Clans. A lot of Zynga's rivals have done a lot better and just executed much better on mobile than Zynga has. So I think that there is definitely some threat there, and Zynga's player base has been shrinking a lot. They're paying portion of their player base has also been shrinking. I think the real test for them at this point is going to be, can they come up with actually new innovative titles using this natural motion acquisition as opposed to just kind of rebooting the same franchises that they've had over and over again?
Yeah, that seems tired. That doesn't seem like they're mounting much of an offense.
Right. I mean, like, in fairness, Nintendo did that for 30 years, but
they're
now starting to kind of like crumble there too. But I mean, again, I would just want to see, under this new leadership, I want to see if Zynga can actually come up with something innovative that's not just copying people or not just rebooting the same old stuff over and over again.
All right, let's move on to Apple. Apple has announced that CFO Peter Oppenheimer will be retiring at the end of the company's fiscal year, the end of September. What do you think about this?
So Oppenheimer has been at Apple for 18 years, of which the last 10 were he was CFO, and he actually just joined the Goldman Sachs board last week, so kind of interesting timing there. So Lucas Maestri will take over CFO in June, so that gives about a 3-month transition period where he can kind of learn the ropes a little bit more than he already has. He joined the company last February as a corporate controller, and at the time, I mean, he left Xerox as their CFO, so he definitely has experience as a CFO of a large public company.
Does it concern you that he hasn't been at Apple for that long, though?
Well, I think that this was always part of the plan. Like, back when he moved over, there was all the speculation that this was all part of the succession planning for Oppenheimer, which was about a year ago. So I think that if that was kind of the precedent that the talks they've had internally, that this is just a long-term succession plan.
So this doesn't surprise you, this move?
It doesn't really surprise me, considering I mean, if you look at the past couple of conference calls, Maestri has also been having more of a role on the conference calls, answering questions himself directly. So he's definitely been taking much more of an active role in the company's finances, especially with the public and how he communicates with the public investors. I mean, any CFO transition is always going to be a headline event, but I think the important thing here is that the transition is orderly. I mean, if we look at Steve Jobs and Tim Cook, I mean, that was a very orderly transition, the most orderly one that Apple's ever had for the CEO. But at the same, of course, we can talk about what the prospects since then. But as far as actual transition goes, it was pretty smooth, and I think that that's what we're looking for here, is just have a smooth move over. Anything
investors should be worried about?
The one thing I'm wondering going forward is if Maestri will keep Apple's current methodology of providing guidance, because in January of last year, the company really changed its guidance strategy in a big way. They went from this really lowball point estimate to a more realistic range, and in every report since then, Apple's shown that it actually is within a pretty close reach of this range. So I think investors are now starting to get used to this expectation that you can actually take Apple's guidance at face value for a pretty good proxy, and if he wants to change it, that reintroduces this whole how do you read into it. So I mean, I don't know if he will. I mean, more likely he'll probably just keep the way it is, but that's one thing I would be looking for.
Major tech players have been focusing a lot on the car lately, with Android and automakers having a notable presence at the Consumer Electronics Show earlier this year. Apple has now announced CarPlay, partnering with a wide range of car manufacturers. CarPlay, what's this about? So
it consolidates all this iOS car stuff they've been working on, kind of rebrands it under this new CarPlay name. All the stuff you'd expect, so it has hands-free dialing, maps, music, pretty much all things you would want your phone to do in your car. Very different strategy from what Google is doing. So at CES, they announced the Open Automotive Alliance, where Android will power cars directly. And I've always had a little bit of concerns too, because I think that's a little bit more of a direct approach. But at the same time, Apple has a very strong foothold with car makers already. For instance, they have over 15 partners, whereas Google only has about 4 automakers in its alliance. So definitely some give and take there.
Apple also mentioned that certain apps will be supported, such as, ones that you commonly use for music or audio, like Spotify. But it was significant that they didn't mention Pandora.
I did think that was interesting that Pandora wasn't included, specifically because Pandora's the biggest, most popular online music streaming service. And of course, certainly, this underscores the competition between iTunes Radio and Pandora to an extent. I mean, Pandora has been holding its own pretty well in defending itself against iTunes Radio. And of course, Google Maps also won't be supported either. But if we look at back to Pandora, it's kind of a blow because Pandora, of course, would like to get this type of integration, but at the same time, Pandora also has direct integration deals already with the partnership with these automakers. So it's not as if they needed Apple to begin with. I think they're in about 130 different vehicle models. So even if it's not part of CarPlay, if it's still just a button push away to switch your car mode, I wouldn't see it as too much of a threat to Pandora.
Do you think any of Apple's rivals might actually benefit from the announcement of CarPlay?
So BlackBerry actually might be kind of a behind-the-scenes winner here. So BlackBerry bought QNX back in 2010, and QNX has a really strong position in in-car infotainment centers and has a wide platform for integrating smartphones with head units. And the QNX is actually the platform that will be supporting CarPlay. And see, Apple is named as one of QNX's official partners, and QNX has confirmed that its technology is kind of underlying CarPlay in terms of how it's going to integrate. And I think that this is one of those things where BlackBerry has been betting on this QNX embedded business as one of the four parts of its turnaround, and they're actually restructuring the organizational reporting structure to have the QNX embedded as a different business. So there aren't any there's not a lot of financial information right now, but going forward, this is going to be something that BlackBerry investors definitely want to keep an eye on, because QNX has a pretty strong position right now, and if they can just keep that and defend it, even if they're kind of supporting other rival platforms, they could actually still do pretty well with QNX.
Apple has always referred to its current Apple TV set-top box as a hobby product, since it's never been a major revenue driver. It looks like this business is a little more than a hobby now. Tim Cook has made some comments. Yeah,
at the annual meeting last week, Cook did say that Apple TV generated about $1 billion in revenue last quarter. That includes content sales. But even then, he says it's difficult to call it a hobby these days. So if we look at it, so the Apple TV sells for about $100. But even when we include those content sales, we're talking probably in the neighborhood of 9 or 10 million units. So, I mean, it's true that $1 billion is pretty small in the Apple scheme of things. I mean, they did $174 billion in revenue last year, so we're talking about 0.6% of sales. So in absolute dollar terms, it's still graduated from a hobby status, even if it's not this huge business for Apple. But the volume is definitely ramping up in a pretty big way.
So in terms of historically, 10 million units, is that a big number for Apple?
I think in this business it is. So in fiscal 2011, they sold 2.8 million units. In fiscal 2012, that almost doubled to just over 5 million. So now if we're talking—
doubled again.
Yeah, right. If we're talking 9 or 10 million, it's another, so I mean, over the course of 3 years, this is basically more than tripled in unit volumes. So it might not seem like it, but I think the set-top box market is another market where Apple is starting to kind of disrupt it and make its impact and change the way that the market works from a structural standpoint.
Well, I think most analysts would probably have said, though, that the set-top box market was kind of a dinosaur. Like, it didn't really seem like something that could be disrupted.
Oh, right? It is. I mean, like, I remember this quote from Steve Jobs from many years ago when he was talking about the TV market and how, because a TV and cable is set up, it's such a subsidized market inherently that people aren't going to pay for set-top boxes because your cable provider just gives you one for free. So if people aren't willing to pay for things, then companies don't really have the opportunity to innovate.
But now people are, apparently. So if you're DirecTV or Comcast, are you worried?
I mean, yeah, I think that's the important thing, is that consumers are clearly now willing to pay for set-top boxes, and a lot of these set-top boxes sort of cut out the cable companies in certain ways. In some ways they integrate, but
we've heard a lot of anecdotal stories about people cutting the cord.
Oh yeah,
so
I think it's definitely on the rise. And I think that, it just shows that the cable industry is shifting, whereas before, cable companies, for example, recently with the Comcast Time Warner thing, they're just consolidating even more. And the cable industry has always been this thing where they don't face a lot of competition, which is why they never move.
That's why your service is so terrible.
Your set-top box has been the same for the past 10 years. There's no innovation on there because of all the, historically at least. But I think that, with people willing to pay, $50, $100 for these things now. It really kind of opens up the door for everyone that wants to come in here and innovate. For example, Roku, another one popular but smaller competitor, they said last year that they're at about 5 million units lifetime after about 5 years in operation. Still much smaller than Apple, but I mean they're a smaller company, but they're also very popular. I mean you probably know a bunch of people have them. And
I have one.
Right, exactly. And I mean there's an Amazon set-top box rumored that might even launch this month. I mean this is definitely an area where people are getting in, and I think that the cable industry has to kind of adapt. Otherwise, they face. I think they're just trying to maintain status quo, but I mean, you eventually have to adapt if the consumers are starting to vote with their wallets that we want a new model.
All right. That's all for today on Tech Teardown. For Evan Niu, I'm Erin Kennedy, and we'll see you next time.